Welcome back, ladies and gentlemen, for another jam-packed daily cryptocurrency market update. If you are finding yourself on my channel for the first time today, don't forget to check out that subscribe button because we drop an update just like this one every single day at 1 p.m. UK time to help you guys stay up to date with the latest and greatest things happening within the cryptocurrency markets, but also the broader markets, and that's exactly what we're going to be doing in this video. If you haven't watched yesterday's daily market update, please do so because we give you a 360 view technically of the markets and our expectations on where we think they're going to go to. And we've been some of the biggest bulls in the room, certainly from the start of 2023 onwards, and this has been based on a number of factors, macroeconomically and technically, and we expect that bullish momentum to continue. In this video, we're going to be looking at a number of really interesting things. We're going to start off with what Schwab are potentially preparing to do in regards to Bitcoin and ETFs. Schwab is an $8.5 trillion financial giant, and they're potentially looking to step into the Bitcoin ETF arena. They already facilitate the 11 spot ETFs, but actually coming off of their own with a 10 basis point fee, which would make them the cheapest fee out there. They might shock the markets next week. We're then going to jump over to global liquidity, which supports our macro view on the markets and why we're bullish. It's interesting how the global liquidity cycle actually lines up with the Bitcoin 4-year cycle theory. And the Bitcoin 4-year cycle theory, we would predict, if it's to follow, and it has been following previous cycles perfectly, and this is the amazing thing about the Bitcoin 4-year cycle theory. It's not plan B stock to flow, by the way, which is just, nonsense. Those kind of models work until they don't. But the Bitcoin 4-year cycle theory, that, of course, self-explanatory, Bitcoin moves around the halvening. It's interesting how we've been following it thus far without any kind of a deviation, despite March 2020 events onwards with all the stimulus and then the rates and so on and so forth. It's interesting how global liquidity matches up with this and kind of looks for a downturn in markets generally at the same time when the Bitcoin 4-year cycle theory would have played out and that bull run would have taken place. And we are going into the halving. I think it's about 80 days away. We're then going to look at the stock market. We're going to be looking at Amazon. Remember, one of our views for being bullish on Bitcoin is because Bitcoin is in an uptrend against the stock market. It's also putting in similar structure to what it's doing against the dollar in regards to this inverse head and shoulders. You guys know we're waiting for that right shoulder to form. We ran into resistance at 48K. That was all technically signaled before any of the news flows hit. Of course, the fundamental stuff on that was the Bitcoin spot ETF got approved by the rumor sell the news. We know what Grayscale have been doing. We know what FTX have been doing to try and recoup funds in the bankruptcy case. And of course, we ran into macroeconomic headwinds, which of course were centered around higher inflation. We looked at inflation yesterday and how the Fed has actually won according to PCEs. It's back at their level that they want it. And this has all occurred without any kind of a apocalypse like many of the sort of phony macroeconomists were talking about. Anyone can be an economist. Anyone could be anything, guys, on the internet. But you want to listen to the people who time and time again get things right. I'm not saying that's us, but you guys are the judge of that. So we're going to be looking at the stock market. We're going to be looking at Amazon, which we actually think is going to $260. So anybody that holds Amazon out there, I think you're going to be rather rewarded. And this is looking at the same technical pattern that we identified for the stock market. We identified for Bitcoin that predicted a 42K that we got to when many were bearish. And ultimately, if Amazon's going to do this, what's Bitcoin and crypto going to do in an uptrend against that? And then we're going to be looking at the week ahead because there's lots of data that could affect our view on that right shoulder being in, which we looked at yesterday, which would ultimately, the flip side of that, mean the Dixie coming down. Lots of European data, rate decisions, non-farm next week. It's going to be a crazy week. So I don't want to ramble on for too much longer, but let's dive into it all. Let's start things off with the news from Schwab. So this is from Nate Garcia. He says they may shock the world of offering something that's 10 basis points in a few months. And this, of course, is from the senior analyst over at Bloomberg, somebody we followed, Eric, of course. We should be giving him a cut of these videos. So Schwab to enter the Bitcoin spot rave. I say it's already foregone conclusion. Agree with Eric and believe it will happen sooner rather than later. So Schwab, the $8.5 trillion financial giant, may just be weighing second mover advantages, like rolling out shock and ARV low fees since the Securities and Exchange Commission green-lighted spot Bitcoin ETFs 2 weeks ago. Schwab has made all 11 Bitcoin-based exchange-traded funds available on Schwab.com, and the Thinkorswim platform the day after the SEC's approval. It previously only offered Grayscale closed-ended funds, and we know the story with Grayscale. It will run out, so there's good and bad news there. They're still dumping, but the good news is it will run out eventually, and that sell pressure. Actually, the $4.7 trillion has been absorbed. Who's buying that? I would say it's largely not retail, it's largely institutional. So he goes on to say they may shock the world and offer And I'll move the screen across for you guys so you can read this for yourself, because I'm dyslexic and my reading is atrocious. Something that is 10 basis points in a few months, says Eric Balanchunas, senior ETF analyst with Bloomberg Intelligence. I wouldn't be surprised they could have something up their sleeves. They might like to do something like that. So why am I highlighting this? Well, of course, if Bitcoin and the ETF, there was no demand for it, Schwab wouldn't be getting involved. And the fact that they're lowering their fees means that they can make up for it on volume and the derivative side of thing. So that there's obviously real demand there. I want to talk to you guys about the global liquidity cycle. So you guys know how bullish we are. This is just another compounding factor to the already given factors that we have in the forms of the global liquidity cycle. So Larry Fink gave his reasoning for not expecting any kind of a landing like the apocalyptic macroeconomists were all suggesting, even though they clearly hadn't just looked at a very basic chart of the effect of rates on markets. Rates typically bullish for the stock market. Every time rates have gone up, the stock market's gone up. Every time rates have gone sideways, the stock market's gone on and put in a new all-time high. We've expected the same thing to happen, and it is playing out to a T. Look at where stocks are today. Look at what's happening with rates. You know, we've really killed it from that point of view, and we've derived that from data, not headlines, not somebody crying on TikTok about the cost of living when it actually isn't. It is very unrevealing to the overall situation. Anyway, so this is the global liquidity index. Liquidity is what, so when we're talking about liquidity, we're talking about money essentially. It's what moves the markets. When you look at the charts, you're looking against the dollar, of course, dollar reserve, world reserve currency, so on and so forth. We know what's happening with China with their bailout of the stock market. We don't want to go down that rabbit hole. But you can see this is the liquidity cycle, and you can see how accurately markets follow the liquidity cycle. And we are now on an uptick for liquidity. The interesting thing with this is just how the Bitcoin 4-year cycle theory kind of agrees with this. So you're going to get this explosion in liquidity. Larry Fink said you're not going to get any kind of a landing in 2024 because of the liquidity that the US government are injecting. We think that plays out. And you've got to remember, you've got election years this year. There's a whole list of reasoning why we're bullish on the market. It's not just news is the last thing on that list. Technical analysis is first. Secondary factors. News, it doesn't even really come into it. And the news, just like we were predicting Bitcoin to run into 48K and hopefully act as resistance so we could set up for that broader continuation pattern, it is largely irrelevant and all signaled technically. Technical analysis, understand the charts are the footprint in the sand. If you can get them right and you can understand them, you will outperform your peers, and that's what we're here to hopefully help you guys do. So global liquidity is on the uptick. The really interesting thing for me is how global liquidity cycles, which we'll just show that once more before we move on, essentially are predicting that liquidity is going to top out going into 2026, which very interestingly is kind of if the Bitcoin 4-year cycle theory was to rinse and repeat, and we're following this to a T, even to the point of running into the 0618. So if you look at after the halvening to the top of the cycle, how many days this typically is, it's around about 418. This one here was only 300, but we can do this one here, which is 400. This one here, 418 pretty much. And this, if you're to go on and do another 418 days, which we're not suggesting it will, you know, just because this has played out this far, don't make this your sole reason for expecting things to play out. This takes you to the back end of 2025, which aligns perfectly with the global liquidity index. So very interesting, something to bear in mind, something different to show you guys to kind of also compound our reasoning for being bullish on the markets. Remember, we're bullish on the markets also technically. So the S&P is nearly at our target. We had lots of our targets hit last year. So the NASDAQ was one. This target got hit very early on, and now ultimately falling wedge, broader continuation. Something like Microsoft, which was our poster child. You can see how perfectly this got hit. Coinbase has hit its targets and is now basing just as we expected it to do so. What a coincidence that you're basing at this key neckline level. Remember, this lower down head and shoulders target literally ran you in perfectly. And I'll show you that very, very, very quickly because I've taken this off because we're now looking at bigger times. I think Coinbase is on its way to $400+. And I think people say, oh, well, that can't be based on the ETF. It's not. It's based on the fact that they are going to be a gateway into the crypto space. Bring this down and put the proper neckline on. Just very quickly, you know, this technical pattern that we're now looking at, you can see where you roughly ran into. We've not drawn that correctly. It plays out time and time again. And this brings me on to Amazon. This is respecting it perfectly. Breakout, retest, and now you're off. Amazon could be on its way to $263. What is Bitcoin going to do in that context? And remember, this is all supported by where we think the dollar is going. We'll show you that now and how that's going to turn. This is also supported by where we think Bitcoin's going. Bitcoin's in an uptrend against the stock market. I'll show you that very, very quickly. Remember, this is setting up the exact same thing that the dollar chart is setting up. And we're waiting for that right shoulder to be in. We said the right shoulder might be in based on this and how close to the left it got. This is the Bitcoin chart. Right shoulder, in my opinion, may be in. We don't want it to run the left. This may be in. We've said this was going to be a lot more shallow than people were expecting. Everyone is so news and fear driven. It's not good, guys. But if Amazon's going to get to where we think it might get to, which I think the stock market supports, I think liquidity supports, I think the direction of the dollar also supports to bring that on. And we'll talk about what's coming next week because this is interesting. So we think the dollar is on the lower band of this channel. And this channel you've been in since 2008, since we officially entered the Banana Republic with banks, the government basically stepping in and bailing out all banks, and we entered this kind of socialist regime. There's nothing free market about governments bailing in and out everyone. So we think the dollar is going to top here. You've had a lot of good news. The week ahead that we're moving into may see news come out that could support a softer dollar. So the Eurozone inflation is expected to be 0.1. minus 0.1. So a negative inflation GDP. I don't think this is going to be the case. I actually think it's going to beat. And that's going to support the euro. The DXY is 40+% against the euro. You've also got rate hikes in the US. Remember, rate hikes is another reason why we think the DXY is going to where it's going to. We've shown you this previously. Please go and watch yesterday's video if you haven't already, guys, because we really give a very in-depth 360 analysis of the markets. You can see when rates come down, this comes down. Rates coming down are not only signaled via inflation, which the Fed has won the battle on. We showed you that yesterday. It's also signaled by the yield market. This is the twos precedes, and the tens, which we think is now coming down. We're not in the hot spike of rates unless something... So rates would spike if the debt markets fail, and I think the buyer of last resort for the debt markets will be the Fed. I think they would buy up, unless they're planning on a global reset, they're going to buy bonds. But then you've got the hyperinflationary things about that. I think they don't, they have control over the system in regards to the fact that it's just a joke system. They're going to keep propagating that for as long as they can. And I think a crash comes a lot later than people expect. So going back to the week ahead, there's lots of news coming out. You've got the Fed rate decision. Fed are going to hold rates, in my opinion. They're not going to lower them. I don't think they'll lower them in March either, but sideways rates typically good. And then we've got non-farm payroll. It was a really high non-farm payroll number last time. You had higher than expected inflationary prints. I think all this is going to come back into line. You're going to get a softer job market. You're going to get better than expected Eurozone GDP, so on and so forth. You've got US ADP reports. There's a lot of data. Eurozone inflation, which I think actually is going to come down compared to where it was. So that's going to come down. It's all going to support the euro, which is going to in turn invalidate the or see pressure on the DXY. And actually, if you look at the DXY, or if we look at Bitcoin very quickly on a shorter time frame, again, another reason why we think this right shoulder might be in is because you've invalidated short-term downside structure. Lower, low, low, high, low, 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 high, low, high, low, high. And now you're putting a high, 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 low. And I think this is going to start to climb. And this could literally be the right shoulder. There's macro reasons to suggest. I've just had my face on the whole time, but this is what I mean by invalidating the whole structure. So a bit of a jumbled update, guys, unfortunately, but a lot to look at. We'll be reporting on this day in, day out. Ultimately, we're bullish. We've got a number of reasons to be bullish. We think it could be a green week ahead of us, and we think there's a lot of data that's going to come out that could support this. And our general trend, our general overview on the markets is unchanged, and we're wishing you all a smashing Sunday, and we'll catch you all in the next one. Thanks a lot for watching, guys. See you in the next.